Good evening, everyone, and thank you for joining us. We will begin shortly. Good evening, everyone, and thank you again for joining us. My name is Will Crosswell, and I am the Chief Retail Officer for Arden Credit Union. We've had several virtual workshops, and sometimes technology is not the easiest to use, so please be patient with us. If you need to ask a question during the workshop, please click the Questions tab and type in your question. The photo to the left is the screen of an iPad, and the photo to the right is the screen of a desktop. We have Aletta from Arden's marketing department on the line who will relay the questions to our speaker during the Q&A session at the end of the presentation. Please know that this workshop is being recorded and will be posted on Arden's website within the next few days. Let's hear about our speaker this evening. David has been with Student Choice for nearly 5 years and oversees partner relationships with U.S. credit unions, including Ardent. Before joining the team, David oversaw financial education efforts for a credit union in San Antonio, where he developed a state and national award-winning program centered around local universities and colleges. A Texan through and through, David first started using the word howdy after joining Student Choice and visiting credit union clients across the country. And I wouldn't be surprised to hear a y'all in there either. So please welcome David Rodriguez.
Hello, everyone, and good evening. Thank you for having me today. And like Will mentioned, you may hear a y'all in there. I still reside here in San Antonio, but I'm happy to be with you here. I'm happy to be here with you tonight. There's a lot of ground to cover. There's a lot of murky waters ahead as we are learning and hearing all the buzz related to federal student loans. And in fact, we updated the slide literally earlier today because of an announcement. So I'm happy that I am here to discuss these items with you and hopefully clarify and put you a little bit more at ease, but ultimately prep you for what's coming down the pipeline, as well as considerations that you should have. So some of the items that I'll be covering today are just going over some of the federal student loan updates, giving you an understanding of student loans in general and getting a good indicator of where you're at, knowing the terms that are and requirements that are under each loan, because there's private, federal loan, and even institutional loans that are out there that you may be looking to pay off and or get ahead by paying those off. Also doing the math, so we'll do a couple little, just short exercises just to kind of highlight, because as you know, with many things related to finance, there's no definite answer. It always seems that it's a it depends answer. So hopefully we'll play out some scenarios here at the end and give you some tips on how you can pay off your student loans faster and move forward with the next endeavor in your life. Sorry, there's like a little lag here, so bear with me as I change these. All right, so as it relates to some of the legislative activity that's been going on, this is what you've been hearing in the news lately. And it's first and foremost, it's all centered on federal student loans. So whenever we're talking about the different items that are going on in the news, including today, we're talking about federal student loans. And that's important to note because you may have private student loans that are out there and it does not apply. So you would want to just be aware that there's a difference between the two, and we'll highlight that. But one of the items that came into play was in March of 2020, the CARES Act passed, and within that CARES Act, there was a moratorium and or a freeze on federal student loan payments and interest. So during the time period from March up until present day, it has continued to be zero interest being accrued on those loans, as well as no payment has been due, okay? And yesterday, there was an indicator that it was going to be changed again because it was set to go into repayment as of May 1st. However, that got pushed once again to now August 31st. Now, there's no definitive, this is the end date, as we've seen with this happening, I think, in 7 times now or 6. So I don't have a crystal ball. I can't tell you that for sure come April 31st, you're going to be responsible for paying your loan. That I can't do. But we'll give you some tools on how you can kind of stay ahead of the game and make sure that you keep abreast of what's going on particular to your loans. Okay. Another item that's been talked about is student loan forgiveness. And you hear about loans being forgiven. You've heard one party push for the current administration to eliminate all student debt. And they're talking, once again, federal loans, but to eliminate it altogether, even throwing out numbers such as up to 50,000, where Biden specifically has stated he leans more to 10,000 per student or per graduate. And with that, there's no, it's partisan. So essentially, you have one party that is for some type of relief, and how to do that, there's kind of a divide there as well. And then on the other side, you're not necessarily hearing any of that. So will it pass? We don't know. But there has been different forgiveness that's been granted across the board now. And these have related to those that are disabled, those that attended like a for-profit college that was that ultimately deceived borrowers. An example of that would be like ITT Tech. That's one of the big names that a couple of years ago filed for bankruptcy, left those students kind of with the bags hanging. Some of them didn't even get to graduate, even though they were in their senior year. And that put them in the bind, and they were still on the hook for repaying those loans. So recently that was forgiven. Another is soldiers that are deployed overseas in war zones. And then those that have passed away, providing loan forgiveness for those. Now, this list is ever evolving. And with that said, I'm going to point a resource, and you're going to hear this resource multiple times tonight because it evolves and it changes. So for me to list out the 40 different eligible items, it's just going to be too much and too long. So know that we'll do that. And then the last piece that's going on, which hasn't passed, is this Fresh Start Through Bankruptcy Act. Now, this does have some bipartisan support on both sides. And what it would do is after 10 years, you could potentially be able to discharge federal student loans in bankruptcy. Right now, it is very difficult to put any student loan into bankruptcy. You have to show extreme hardship and so forth. So this changes that aspect, but once again, specific to federal student loans. So that's kind of what's been going on. Once again, it changes. You hear a lot of buzz on both sides as it relates to it. And it is ever evolving. So we may hear something differently and outcomes may change down the road. So on the current federal loans, one of the items to note is that even though these federal student loans are on freeze, that does not mean that every federal loan qualifies for the zero interest and zero payment during this moratorium. In fact, there's specific loans like the Federal Family Education Loan Program, as well as the Health Education Assistance loans. Those are owned by commercial lenders like banks, et cetera. And those do not qualify or may qualify, but it just depends on that particular bank or lender that has it. The other one is institutional loans that were under the Perkins loan umbrella. Those are owned by the university or college that loaned that money out to the student at the time that are in repayment right now. Those may or may not benefit from that 0% interest that's going on right now. So that's important to know.
David,
Now,
we have a question from an attendee.
great.
They just wanted to clarify that interest is not accruing on these federal student loans that were not in those programs that you mentioned, and that
So
is going to keep happening through August of 2022?
yes, as of right now, from March of 2020, and as we know right now, August 31st, your federal loans, if you have a federal, and it's primarily what we're talking about is a federal direct loan, because those loans were given out and are given out to anybody that requests it, is an American citizen, and breathes essentially. So those are primarily where that student debt is for most people, the federal direct loans. Those have accrued zero interest. So if you took out $10,000 for your senior year and then you graduated and you went into repayment, right? That $10,000 has not been accruing any interest. So from March to now, if you were to look at your balance, it should still show $10,000, okay? If you're making a payment though, that payment goes to interest. So if you put $1,000 right now, then your balance should reflect $9,000 during this time period. So it's not accruing. I'll give you some tips on what you can be doing, because some people are of the opinion that student loans will be forgiven altogether, and some are of the opinion of it's not going to happen. And then there's a little bit of gray area in between of where most people fall, which is, yeah, there may be some, there may be not, but I don't know if I'm going to qualify. So there's some strategies that you can use to kind of put yourself in a position so that if it does go into repayment, you're ready to go. But other federal loan benefits that are offered in general and not related to this moratorium that's going on right now is the Public Service Loan Forgiveness Program. So those that have either worked full-time and in some cases volunteered full-time in public service jobs can qualify. Now the way the parameters work is you've worked in public service and you're paying on your loans, and if you do it for 10 years, then guess what? We'll forgive the remaining debt. And that's the way it's kind of operated. Now, with the recent administration, they have made some changes to make it a bit easier, because there was a lot of hoops to go through. So, for example, I may have started my work as, let's say, a policeman, and I'm paying on my student loan, and I'm 3 years in, and I'm like, you know what? I realized I was supposed to apply for this for consideration. And so then I go in and apply. Well, lo and behold, now the payments that I'm making, it starts from that third year instead, that third year on. So that's literally day one, and then I got to go 10 years. So now total, I've been paying on this for 13 years, where if I would have filed initially, I would have been done at 10 years. Okay, so they've opened that up where they're counting that now. So, hey, David, we know you didn't apply till year 3, but you were paying on this loan even before you applied. We're going to go ahead and allow you to apply that. So now you're on year 3 and you keep going until you get to 10. So that's one of the enhancements that has been made. And those similar items fall under these loan benefits that are already in place. They're just essentially getting rid of some of the hoops that people would have to crawl through. That's what they're doing. So another program that's out there is the Teacher Loan Forgiveness Program. And that essentially said, if you're willing to teach in a low income, high risk area, we are going to give you this benefit of you pay your loan and you make payments for 5 years. And guess what? We're going to forgive this other piece of the debt. Okay, so those are 2 items that have been cleared up. Now, another federal loan benefit that has been in place is an income-based repayment plan. Okay, and those you have to show that you have a hardship making the payments, and so you submit your request and so forth. And ultimately, what they would do is they would cap the amount of payment that you make to 15% at most. Okay, and so you'd have monthly a monthly cap of 15% of your discretionary income would go to a payment. And then if you did that for 25 years, unfortunately, then it is forgiven. And then the last one, pay as you earn, that is for those that have high federal, a lot of federal debt or federal loans. You can potentially qualify to have it capped at 10% of your discretionary income. So once you make 20 years of payments at the 10% level, as long as you do that, they'll write off the remaining balance. So those are longer terms, but it just makes it a lot easier for folks to live because you're only dedicating 10% of your income or that 15%, as opposed to potentially paying 30–40% of your income, making it hard for you to live. So those are the benefits that have been in place with the first two, public service loan forgiveness and teacher loan forgiveness, having new qualifiers. So let's see. Sorry. So those two that I highlighted, the public student loan forgiveness, this is that enhancement that I'm talking about. So right now, up until at least the end of October. So this was introduced, I believe, in October of this past year, and they created this waiver. And like I mentioned earlier, if you've been making payments but realized, oh man, I've been paying on this loan for 5 years, I thought I qualified, but now that I'm looking into it, I was supposed to fill out a form and I was supposed to get approval and go through these different hoops before I even potentially would be in this, fall under the parameters. So a lot of people didn't know that. They cleared that up. They created this waiver so that you can apply the previous payments that you've made into this program. You still have to qualify for it. There is some forms that you have to go through, but by doing this, it provides an opportunity for people to potentially benefit from a benefit that was already out there. So that's kind of the key. So even though you're making payments, if you haven't been making payments because of the freeze, it would still be beneficial that if you qualify under that the public student loan forgiveness program, if you qualify for that right now, go ahead and apply, even if you're not going to make payments, because that will just kind of get you within that time frame, just in case they cancel it at the end of October. So just keep that in mind. Now, you may have not made a payment in a while, and what has ended up happening is some of the servicers, the people who manage or who take your payments every month, that send you statements, those are the servicers. And so you may have received a bill at one point if you were paying or ever received a bill, and it came from like Navient. I know in Pennsylvania, one of the key players in the servicer industry for student loans is FIA loans. So you may have seen statements that are coming from these institutions, and those are what are called your servicers. Now, several of them, the ones on your left side there, they're getting out of the business and or have already left the business of servicing. And that is now transitioning over. And so the new servicers that are coming into play are the ones on the right. Now, these are, once again, specific to federal student loans, but the new players are the ones on the right, whereas the ones that are getting out of the business are on the left, okay? So your loan may change hands, and you may say, well, which is which? Which one do I owe money? Which one I don't? I'll give you a tip on how to figure that out here in a second. But know that because of the changing of hands, you will see letters, notifications that say, hey, we are your new servicer. Here's where you need to set up your account. Here's where you're now going to make payments. And it can be very confusing. So we'll give you a tip here. So I would start, and this is the website that I was telling you about, and you're going to start hearing me say it over and over again. go to studentaid.org. And well, actually, a correction on that, and that's a typo on my part. I'm sorry. It is studentaid.gov. Okay, studentaid.gov is where you can go into a database. It has a wealth of information on all other topics for both during school and repayment time. But studentaid.gov is where you can figure out and find out who your servicer is and where to find them and their contact information so that you can get ahead of the game. There's another website I'll share that one with you as well shortly, but that one has kind of a longer name to remember, whereas studentaid.gov is a lot easier. The other thing to start doing at this time is gather all the different loans that you do have and start separating and understanding, okay, which ones are qualifying right now for the 0% interest, no payment, and our federal loans. Have those on one side and have your loans that are in repayment or do not qualify for that. So it may be a private student loan. It may be a refinance that you already did earlier in the or a year ago. It may even be an institutional loan coming from the school that you went to. So know the types and start jotting those down so you kind of get a grasp on what's what and where's where. Continue to make payments. A tip that I will share with you is if you were of the mindset that, hey, student loans may get forgiven, and the last thing I want to do is pay all this off, and then the next day they say, guess what? Look, all debt's forgiven at this point. Okay, if you have that mindset, that's fine. Here's what you can do. You can start kind of setting aside either a savings account or some type of deposit account where you can mimic making payments and or loading up funds so that if ultimately you have to pay, when you know the line is in the sand, August 31st, you enter repayment, there is not going to be student loan forgiveness. So come August 31st, guess what? You have this money parked. You can now apply it directly to your account and reduce your debt significantly. Because right now, what you're benefiting from is the 0 interest. So you can, everything that you're applying to that loan or the loan right now is going towards the principal. Meaning, if I took out $10,000, like that's how much I borrowed. In a normal world, it would be the $10,000 plus the interest that has accrued while you're going to school and probably not making payments, okay? Right now, it's the $10,000 that you borrowed. And when you're making payment, it's breaking that down. And that multiplies times whatever your rate is whenever it does enter back. And the smaller you get the principal, the smaller the payment is and the overall debt that you end up paying. So if you can make payments, that's great. If you think that they are going to forgive debt, park that money, but get ahead so that you're in full control when the time comes. Do things such as update your auto pay. So since you haven't been making payments on federal loans and these servicers may or may not have changed, you want to make sure that, hey, my debit card expired last year. I haven't been making payments, so I haven't updated. You want to do, it sounds trivial, but you want to do those little things so that you're ahead and it doesn't sneak up on you.
David, we had a question, sorry, about federal loan types. There's an attendee who consolidated loans for her daughter in her name, and they're through AES. And she's wondering if you have any knowledge if AES can benefit from the federal loan situation, or if that is more of in a private loan situation.
So I'm not familiar with AES. I know I've heard the term, but I don't remember if they are a federal and or a private institution. I am not sure. I'm sorry. if she happens to know and can type that in there, or we can address it here at the end. But if it is,
Okay.
if she did a consolidation, and I'm going to explain, well, I'm getting a little ahead of myself, because there's a difference between consolidating your loans and refinancing your loans whenever you're talking federal versus private. Okay, so if keep that question in your pocket if you don't mind, and if she can, if she has any more added color that she can put to it, that'll help whenever I answer here in a bit. All right. So the thing we got to do, and kind of where I was alluding to, is just taking stock of your federal loans. And the next one we'll talk about the private loans. But where do I find them? So as you can see, you go to studentaid.gov. This is what the page looks like. You can create an account, and then you can do a search on where are my loans at, and it will show you the current servicers that you have and which loans you have, et cetera, et cetera. There's also a database, and that's that nslds.ed.gov. That one's a little bit hard to remember, but both of those are aggregators and will tell you where which servicers are yours. Now, if you took out a loan in your freshman year, and then you took out a loan in your sophomore year, junior, and senior, that's 4 different loans. And those loans, when you enter into repayment, it's 4 different payments that come into play. So kind of going to where the question was alluding to, if I consolidated that, meaning and you can do it from this website, but you can call them up and you can say, hey, you know what? I want to consolidate all of these. I got 4 federal loans. Can I just have one payment that's due one time a month? And what they do is they'll take that and they'll consolidate it into one. It's still a federal loan. It still benefits from the federal loan forgiveness and the different qualifiers that I mentioned earlier. But all it's doing is taking that and putting it into one. And then as far as your rate's concerned, they take the rates of each loan and then they average it, and that's your loan going, or that's the rate going forward. Okay. So you can find out this type of information. So whenever you're looking at your servicer, some of the information that you want to look at, just so that you're aware, is what's your balance? What are the terms? Like, is it for most federal loans, it's going to be a 10-year repayment. So look for that and see what you have left. Look at your interest rate. Also look if it's subsidized or unsubsidized, especially for those of you that are still going to school. Because if you're going to school and it's subsidized, what that means is it hasn't been accruing interest the whole time while you're in school. Okay. If it's unsubsidized, which is where the masses are, it has been accruing, or it was accruing interest while you were going to school up until March of 2020. Okay. So look for that. Then take that information and start exploring if you're eligible for any of the benefits. You can find, once again, on this studentaid.gov, if you qualify. This is where you can type in, where you can do a search and see if you qualify under a certain federal program. So a great page to explore, a lot of information there. Now, with your private student loans, if you took out any, it's not going to have any of that information because it's private. So what you do here with private student loans is, if you have no idea, they should be sending you statements, by the way, but if they're not and you have no idea where they're at, what you can do is, if it was an institutional loan, like you've got it at the school and the school gave you that loan, or you applied for it while you were in school, then check with the university that you went to, and they can point you. It'll be the financial aid office, but the financial aid office will be able to tell you, hey, this is where your loan is serviced. Here are the contact details. If you went to a bank or a credit union and you took out a private student loan, but you have no idea who they are, you can pull your credit. Always know that annualcreditreport.com is the true free one, and that's where you get a full detailed credit report that you can look at. You can also check directly with the credit bureaus. But once again, what you're looking for is, what kind of rates do I got or have? I'm sorry. What is my balance and what are the repayment terms? What is the interest rate? Is this one in repayment? Did this one maybe benefit through something that the credit union or bank offered that had a different type of benefit? And am I eligible or am I taking advantage of it? Okay, so that's how you can find your private student loans. Sorry for the delay sometimes. Thank you. All right. So like I mentioned, with a federal consolidation loan, what you're doing is you're reaching out to the Department of Ed and you're saying, hey, I got these 4 loans here and I want to consolidate them. I want to get them into one payment. And your goal in that scenario is so that you have one payment due. It may be cumulative of all 4. So instead of paying $50 here, 40 here, 30 here, it's just consolidates it into one, and you have one $200 payment every month. And that's how that typically works. Now, the terms, whenever you get into consolidation, all federal loans start typically at that 10-year repayment. But when you do a consolidation, those terms can be changed or may change just depending on what you choose. There's no origination fee or anything like that. So it's beneficial for you to take advantage of this, even if you've been on top. Reason being is because it just avoids the headache and the hassle of remembering, okay, this payment's due on the 1st, this one's due on the 5th. I got to log into a portal over here for this one. I got to create a different portal for that, where that can start getting hard to manage. Almost like if you have, 5 different credit cards and your car payment and your mortgage, it just starts becoming a headache. And if you don't have that on ACH or they forget, I mean, it can become a hassle. So consider doing this. Also know that most lenders in the federal space and even in the private side, whenever you sign up for ACH, they usually give you a quarter rate discount. So know that that's there. The other thing on federal consolidation is they didn't check your credit. There's no checking for credit. So that's a good indicator if you have a federal consolidation loan versus not. So to the question earlier, if you had to, if they had to pull your credit and make a decision based on your credit, then it probably wasn't a federal consolidation loan. It could have been a private one. Okay. So on private loans, what we have here is also called a refinance. Okay. And this is where a bank or a credit union, they have a refinance program. They typically will call it refinance. Okay. And what this does is it allows borrowers to refinance student debt and or consolidate it. Now, the primary driver in why most consumers refinance is to save money. It's like, I can lower my payment, I can lower the amount of debt that I pay because the rate's a lot better than I received. Okay, so if you took out a Parent Plus loan to help out your kid, you probably landed, if it was in the last 4 or 5 years, you probably landed at that 7% rate. And then you see that the credit union offers something in the 3s. Well, yeah, that's a big savings. So think of it almost like you've probably been thinking about your mortgage, and you may have even refinanced a refinance just to take advantage of the interest rates. So whenever it's offered through a private lender, primarily why people are using it is to save money. The second thing could be, well, I have a payment due here, there, and there. I want to consolidate it into one. Now, the only thing is you're only consolidating, or you're only bringing in school-related debt. Okay, so you can't loop in, oh, I got a car too that I want to refinance. Now, there's other avenues that you could, I guess, refinance or do something. Maybe you do like a home equity loan or something like that. But when we're talking a specific student loan refi, we're talking about it will only allow student loan debt to come into play. The terms can be all over the board. Some banks, some credit unions, their terms may be completely different. Their rates could be completely different. They may charge an origination fee. They usually don't, but typically you'll see that. And if you don't have credit if you don't have a certain amount of credit, you may not be extended the loan, just like with all other loans. So a co-signer or co-borrower may be needed. And then you're going through their underwriting criteria. So that means they are going to check your credit. They are going to pull scores. They are going to check income. They are going to do things of that nature in order to qualify you for that loan. So very, very similar to what you've experienced. Maybe not as much as or in depth as a mortgage loan. There's not as much paperwork involved, but still it's a process. So when it relates to what Ardent provides, they have a refinance solution as well. Now, Ardent, their solution, the way it works is they have just like most shouldn't have origination fees, processing, or disbursement fees. So unlike a mortgage loan, there's not going to be this origination piece that you have to come into play. So when you're rate shopping and looking, you can typically avoid those type of expenses and almost do like you've done maybe on an auto loan where you move that over. But Ardent doesn't charge for origination or processing fees. They offer a 5, 10, and 15 year, and you get to choose between a fixed or a variable rate. I know probably the most popular for most consumers is the 10-year fix, and then second to that would be the 15-year fix. Those are the two most popular, but you can see they got very attractive rates right now. Now, a big thing that's driving people to refinance student debt right now is because we've been in a very low interest rate environment, but as you know, they've started to raise prime, and as they do that, and we know that rates are going to continue to rise, so too will rates across the board. So there's been like a rush of people starting to refinance. Now, what are they refinancing? Typically they're not refinancing their federal loans. They're leaving those alone, and that's for the bulk of individuals. That's the right thing to do. Leave those untouched, leave those on the federal side so that you can potentially qualify for the benefits, so that you can continue the 0% interest, maybe because of the payment or the zero payments as well. But what they are bringing over is other private student loans that they took out while they were going to school, and refinancing a previous refinance to take advantage of the lower rate. So that's primarily what we're seeing come through right now. But for some, maybe a federal loan does make sense to move over. It's totally up to the individual, but those are the considerations. You can borrow up to $100,000, and mom, dad, or co-borrower. Here's a nice feature, and that is after 48, if you have to come in on the loan to help your son, daughter, and there's 48 on-time consecutive payments, well, guess what? You can ask to be removed from the loan, and as long as son or daughter, they should be established at this point, that as long as they meet the minimum requirements for eligibility on this loan, then you can be totally removed and sell off into the sunset. So that's always a nice feature to have. But now that we've kind of talked about how refinance and federal consolidation loans work, how do you kind of determine, like, does this make sense for me? Well, on Ardent's website, they have a fun calculator. Well, I don't want to say fun calculator. I don't think anybody finds using a calculator fun, but it is a lot easier than writing it down on a piece of paper. So what you can do is you can go to their calculator. You can input the loans that you have. So in my scenario, I typed 2 different loans, but at 30,000, and I put them at different interest rates. So I plugged in those numbers, and then I said, well, let's move the throttle over here to 10 years. And what it does is it gives me an estimate as far as what my current payment is, what my new payment would be, what the difference is, and what my savings. So it's real easy to play with and maneuver and kind of play out different scenarios, but it's a very helpful tool that's free, easy to use, and you can play with it anytime you need. So let's talk about a couple of scenarios here. I'm going to take a quick break, or not a break, but this is a drink. So let's take a look. So Abby, her main goal is she wants to lower interest rate, and she wants to take the Parent Plus loan off of her mom, and she wants to take over the payments. So she comes in and she's got 3 federal direct loans that total just under $30,000. She's got 2 federal Parent Plus loans, which are the ones that she wants to take away from her mom. And as you can see, it's almost $70,000. And her current interest rates are 6.8 to the 7.9. And then she's got 10 years left on those with 8 years remaining to pay those off. So should she refinance, or should she even think about it? Well, once again, it always depends. So with her scenario, all right, with her scenario, like we mentioned, that on the left side is what she currently has, but looking at refinancing at 5 years at a better percentage rate, so little under 3.5, that would make her monthly payment go up higher, right? Significant, or hundreds of dollars more. But in terms of interest, she's going to pay a heck of a lot less interest and save over $22,000. So for her scenario, and based on what she was trying to accomplish and her objectives, this would probably be best case scenario for her to refinance those. Now you saw that if it makes sense, then yes, maybe you proceed. Now, because of the 0% interest and so forth, the Parent Plus loan probably has been accruing interest, and mom is paying interest on it. So that, yeah, we want to move that over. But on her regular federal loan, maybe not. Maybe we just leave that one untapped. Okay. So for Abby, we're probably going to say yes, she should refi. Now the next person here is Alex. So he just finished his bachelor's. He's going to go to graduate school, but he sees that he sees an ad that says, "Hey, refinance your loans at this rate," and he's like, "Yeah, you know what? I should check this out." So he goes in. He's got 6 federal direct loans. He's got an interest rate that's between 3.6 and a little less than 5.5. 10 years term, 9 years remaining. Then he's got 3 private loans of over $30,000. Those interest rates slightly better than the federal loans that he has, but those have 15-year terms, and he's got 14 left. Now he's entering graduate school. So for him, does it really make sense for him to refinance? Probably not. So Alex chose not to refinance because right now while he's going to graduate school, his loans will probably be left in deferred status. And those loans that were subsidized, meaning they're not accruing any interest, especially right now during the moratorium. So while it's in deferment, he's not going into more debt, right? And then his private loans, they have a lower interest rate than the federal loans, and he can manage that payment. So he can continue to make those payments. And then once he graduates from graduate school, then he can look at refinancing at that point, especially whenever he's able to land a better career and make more income. So at that point, it would probably make more sense if he held off. So those are kind of a couple of scenarios. And like I said, it's always, it depends. It's always it depends. It depends on what's going on personally in your life, what's going on with your with the next couple years, or what you anticipate. What are your goals? So things to just kind of really consider to paying off your debt faster. Just like you hear with all types of debt, if you can make more than the minimum payment and apply that towards your principal, that's great. If you get bonuses and you weren't anticipating that bonus, take that and apply it. If you're working for an employer, check to see if they offer any benefits. For some employers, such as ours, we have a program that where our company pitches in X amount of dollars every month towards your student loan, and they pay that to the student loan or the loan directly, and that helps. So even if it was $50 a month that they're paying, that's $50 that you didn't do anything for. So check with your employer, check with HR department. If it's your son or daughter that are not here tonight and should be hearing this message, ask them to check with their employer. A lot of times these employees do not know or realize that it's offered to them, but they just need to ask and bring it up. Of course, if you get a raise, taking that extra earnings, and if you were able to get by on what you were making, then applying that, or saying, okay, I'm making $100 more every paycheck. I'm going to keep 50 for me, but then I'll put this other 50 towards my debt. And you'll be surprised that even if you're doing like kind of this, I'm going to sacrifice a Starbucks for a day and put that $5 towards paying off my debt. You'd be surprised how and you can play with calculators and find this out too, but it does take years off your debt. So it's always interesting to see. Of course, trimming your budget, taking a look at that, earning extra money. But the other thing, like I mentioned earlier, and I'm not going to read every one of these, but the other thing that I had mentioned earlier, which is park this money, especially with your federal loans, park that money somewhere. Open up another savings account there at Ardent and park this money. You're not having to make a payment, but you're putting this money. You're saying, okay, I should be paying $250 a month. I could be making that payment. I know at some point they probably are going to tell me I'm going to need to start making payments. So get into that healthy habit of taking that money, putting it into that savings. And then if they ultimately say on August 31st or late August, hey, August 31st is the red line, you will be responsible for paying your loan after that point. You will start seeing interest accruing. Well, guess what? You have this money now that you can use and apply it to that loan. Knock down that principal, and then ultimately lower your payment or your overall burden as it relates to your loan. So where can you get some other resources and information, especially because, like I mentioned, there's a lot of case-by-case scenarios as it relates to people. And I know that. And so you can come to these webinars and you can get a lot of information, but sometimes you just need to bounce ideas off of somebody and play out scenarios and work out the individual details. So what we have is, if you go to Ardent's webpage, you can see they have some details on the student loan refinance product that they offer, but they also have a wealth of information that you can also find. So the calculator, you can do that. You can also check the resources page that has things such as a guidebook. This is just like a quick, easy to read, step-by-step guidebook that you can download on demand. Gives you some tips. It gives you some websites, some that I already shared earlier, but it kind of breaks things down a little bit more easier. And then if you see on the screen, you can see College Counselor. It's one of the square tiles towards the almost towards the bottom there. But if you want to just talk to somebody about your individual scenario, I encourage you to click the Learn More button on that College Counselor, and from there, ultimately, you can, if you have a quick question that you just want to run by, you click that Ask a Question, submit that question, and you'll get a response to that question. She's pretty good as far as responding within 24 hours, but we ask up to 48 hours for a reply. But in addition to that, you can schedule an appointment and our college counselor will reach out to you, have a one-on-one conversation about your specific scenario, and is there to just give you guidance. They're not there to sell you any product, put you in any product, get you to lean towards Ardent's product or someone else's. Is there just to provide information and help you find the resources and help you find clarity. So leverage those resources that are out there and know that they're there. And with that, I want to open the floor up to some questions that folks have submitted.
David, we have a few questions that have come in. One attendee was wondering how many times they can refinance their student loans.
There's really not a limit. There's not a limit. I've never seen any criteria that. Well, I'm just going to say there's not a limit. I've yet to see it. And I know we've seen somebody on their third refinance. I've seen that come across. But there's no particular limit. It is a rate-driven environment. So if your credit improved and you secured a 5% rate a couple years ago, and you're like, you know what, my credit's gotten better since then, maybe I should consider refinancing. Take a look and see if you qualify. You'll notice on Ardent's rates, their high and low are completely different and very competitive whenever you look at their range. So you may have seen something for like 1% through X lender, and then you see Ardent, and Ardent it's in the 2s, and you're thinking, well, you know, they're at 1%. Should I even consider? Well, if you look at their range, you'll probably see 1% all the way up to 12%. And unless you have extreme stellar credit and or pay attention to some of the disclosures, there may be some additional hoops for you to qualify for that as low as rate that they're offering. But at Ardent, you'll see that the ranges are buckled down. So you'll surprisingly find probably a better rate with your credit union.
Another attendee asked, does refinancing cost, is there a cost involved with refinancing other than, of course, the interest that they'd have to pay?
No, there's not. There's no origination fees. Also, when you have these loans, there's no prepayment penalties or anything like that. So if you pay it off sooner, that's totally fine. But no, there's not.
They're also asking what determines the interest rate that they would qualify for with Ardent?
It would be based on your FICO score.
Okay, and how do they determine whether they should choose a fixed or a variable rate?
That is personal preference. So what you're going to see in the coming months, and it already happened late last month, prime went up. So prime has been 3.25 for I think 2 years, maybe even closer to 3, and that took a bump. So now it's 3.5, and the Fed indicated that is going to continue going upward, or all the indicators there that it's going to go upwards. So on your variable rates, you're going to start seeing those rise. So you may lock in a lower rate, but if prime goes up, so does your rate. So just know that any time that you're getting into a variable, that if prime goes up, your rate's going to go up. If prime goes down, your rate's going to go down. And if you have a credit card, you probably have seen that, where prime, well, you haven't seen it in a long time, but now that prime's going up, you'll see your payment or your amount starts to rise, your interest. So keep that in mind. If you just kind of like, I want to know exactly what my payment is, when it's due, I want to know that it's always $200 or X dollars, and have that, you may pay a little bit more than the variable rate, but you have that locked in. So it's regardless of what prime does, you will have that locked in during that period.
And David, we have time for one more question. And the question was, what information does a borrower need to have in hand to start that refinancing or consolidation process?
Well, I know specifically for Ardent, when you go into the page, there's a button that says find my rate. And essentially you're just going to enter some basic information, and guess what? It's not going to pull a hard credit pull. So you're not going to get docked for it, or your FICO score is not going to take a dive down as a result. But it does this soft pull on your credit, and then ultimately it'll tell you what rate you qualify for. And then if you like what you see, then you can click the apply button, and it'll take you through the process. Now, a lot of the information that you're entering in the application is probably information that you know off the top of your head. So you can get the approval, but then you'll have to upload documents, and you can do it with your phone. Like you can take the picture of, let's say, a W-2 form or whatever, and upload that, your driver's license, all of that's all electronically. So when you're doing the application, know that there will be information, and it's laid out on the web page, all the documents that ultimately you'll need to turn in. But also know that we have a concierge team that will help you along the way. So this is a person that will literally hold your hand through the process. So you start the application, and then you got to get hung up after a couple days. You will, if you check the box that said, yeah, I'm cool with the help, they will probably reach out to you and say, hey, David, this is Sammy with the Ardent Concierge team. We know that you've been applying for a refinance loan, and we're here to help. What can we help you with? And then they'll just help you. So if you're like, I can't find a payoff statement, I need this payoff statement because I don't know, but I don't know where to find it. They'll help navigate. They'll help you go in the right direction. And by the way, there is a feature too that you probably won't even have to find your payoff statements, because we can pre-populate them when you're doing the application. And then you'll just check, yes, I want to refi this one, I want to refi this one, I'm going to leave that one alone, and I want to refi this one. So pretty easy.
That was our last question.
Awesome. Well, thank you so much for attending today. I hope you found this time valuable, and if you do have any questions, please leverage the resources that the credit union has provided for you. I know we're all happy to help here. So thank you once again for attending.
We would like to thank everyone for attending. There'll be a short survey sent out, and we would love to hear your feedback to help us improve for our future workshops. Thank you, and have a good night.